You've probably heard that real estate syndications are a great investment opportunity, but there are some major pitfalls you've got to look out for. Hi, I'm Dr. Shamim Nazir. I've been an ER physician for 25 years, and I created the Doctor Investor to encourage other doctors to learn more about alternative investments. So what are these 3 very important lessons I've learned while investing in real estate? Now you're probably thinking I'm going to talk about the sponsor, the market, the deal, but no, I'm going to talk about myself. And why? Because I think human psychology is a major component of investing. And if we're going to invest smartly, we've got to learn to manage our own psychology. So let's go over the top 3 things I've learned while investing in commercial real estate syndications. Number 1 is FOMO, fear of missing out. This is a common problem we have with a lot of exciting new opportunities. We think this is the only one and this is going to be the best thing that's going to change our life. But that's dangerous. You never want to think like that. There are literally thousands of real estate syndications happening all the time. And even if it looks like the end-all be-all and you want to put all your money in there, never do that because there's always another one. You want to invest wisely. You want to do your research. Check out that sponsor, that market, the deal. Make sure you're really comfortable with the business plan, how long it's going to take, how much money is it going to take, what's the minimum investment. All of those things have got to be a fit for you. So even if it's a really exciting project and it looks like it's a no-brainer, you want to slow down and take your time and don't fear that you're missing out. Number 2 is to be patient. Investments take time, especially in real estate. You've got to buy that project and maybe build something or remodel something, got to increase occupancy or lease it, got to increase revenue and then sell it. It takes years. Most syndications are 5 to 7 years long, and that means you've got to be patient. You can't be rushing. You can't be eager to see results. Now, if you've been investing in the stock market, you probably see it change every day, but real estate simply doesn't change that way. It's the good and bad aspect of investing in real estate. We want it to be less volatile than the stock market, and that's why we're investing in it. But at the same time, it does move slower. So you've got to be patient. And the 3rd biggest lesson I've learned while investing in real estate is to start small and go slow. What do I mean by that? That means invest the minimum amount. So most syndications start at $50,000, and that is even a large sum. And some start at $100,000 or $250,000. So you want to start with the least amount possible. And if that minimum is still high for you, ask the sponsor if they can adjust that for you. They might be interested in at least building that relationship and getting you into their first investment. And then when your relationship is stronger, you can invest more. So they may be inclined to do that. Of course, if they're raising millions of dollars, they may not want to reduce their minimum because they've got to raise their equity. But that's still something you can ask. You want to diversify across assets, markets, and sponsors. You never want to put all your eggs in any one basket. So even if you are really excited about a particular market and you want to invest heavily there, you want to be careful and make sure that within that market you are spreading yourself out. You're trying different asset classes or different sponsors because there can always be changes in the market, in the economy that might impact a particular region or particular asset class more heavily than another. So you want to make sure that you're well diversified. And another rule of thumb is to not invest with the same sponsor within a year. So once you've invested, wait at least a full year to see how things go. That way you can learn more about how that sponsor works, how they communicate, how they solve problems, and that's going to help you feel more comfortable when you come around to investing again. And it's even more ideal if you can wait a full cycle. That means you've invested with them and they are conducting this project over the next 5 to 7 years, and then they sell the project. That's an exit. So if you can wait for the full exit cycle before you invest again, that would be even better because then you can really get to know that sponsor very well. And in that time, you are also learning more about yourself and about real estate. You're learning how this business works, and you're also learning about your own personality. Do you enjoy this process? Are you comfortable having someone else manage your investment? Do you like waiting 5 to 7 years to get your money back? All of these things are important for you to understand about yourself as well as the business. So it's important to take your time and make sure that you're comfortable with this particular type of investment and this sponsor and the market and all of those other factors. So to go over the top 3 lessons I've learned about investing in commercial real estate syndications is number 1, don't rush and don't feel like you're gonna miss out. Number 2, be patient once you're in it. It's gonna take time to see results. And number 3, start small and slow and diversify. So I hope that was helpful for you. Please like, share, and comment, and let me know what was your biggest lesson from investing.